Imagine standing at the edge of a financial cliff. That's exactly where Lucid Motors found themselves not too long ago. This visionary electric vehicle manufacturer, once hailed as a potential rival to Tesla, saw its aspirations nearly dashed as it teetered on the brink of bankruptcy. The company's stock prices took a nosedive, reflecting investor concerns and the market's harsh response to their financial woes. The root of Lucid's troubles stemmed from a concoction of high production costs coupled with sales that didn't quite hit the mark. Despite the buzz and the promise of innovation, the reality of manufacturing complexities and the competitive electric vehicle market began to weigh heavily on their balance sheet. Each quarter seemed to push Lucid closer to the edge, with dwindling cash reserves and mounting debts painting a grim picture of the future. But as the darkness loomed, a light from Saudi Arabia appeared on the horizon. When all seemed lost, a major lifeline emerged from an unexpected quarter. The Saudi Arabian Public Investment Fund, known for its bold investments in transformative industries, stepped in with a significant financial infusion. This wasn't just a drop in the ocean, it was a decisive move that underscored the kingdom's commitment to pioneering future technologies, including electric vehicles. The scale of this intervention was monumental. As Lucid Motors teetered on the edge of financial collapse, the Saudi Arabian Public Investment Fund provided a robust financial safety net that not only alleviated immediate liquidity concerns, but also reinstated investor confidence. This was not the first time Saudi Arabia had shown interest in Lucid. Previously, they had invested billions, highlighting a long-term commitment rather than a fleeting interest. This fresh influx of capital did more than just keep the lights on. It revitalized Lucid's operations and reassured stakeholders of its potential viability and growth. The investment acted as a strong vote of confidence, propelling Lucid out of the financial doldrums and back into the competitive race within the electric vehicle sector. Moreover, the involvement of such a significant global player brought additional scrutiny and expectations. It set the stage for Lucid to not only focus on immediate recovery but also to strategize for sustainable growth and innovation. With new funds in the bank, Lucid was ready to steer back from the brink. But what did that mean for their future? Cash infusion can be a quick fix, but sustainable recovery is a marathon, not a sprint. When Lucid Motors found itself teetering on the edge of financial collapse, the substantial investment from Saudi Arabia appeared as a lifeline. This was not just a matter of injecting funds, it was about strategically revitalizing a company in distress. In the immediate aftermath, Lucid utilized this capital infusion to stabilize its operations. The primary focus was on streamlining production processes and ensuring that the supply chain was robust and responsive. This was crucial in regaining the confidence of stakeholders and laying a foundation for operational continuity. Additionally, the company addressed its looming debts. By renegotiating terms and prioritizing repayments, Lucid managed to avert the immediate threats to its financial health. This breathing space allowed them to redirect some resources towards research and development, an area vital for their long-term survival and competitiveness in the electric vehicle market. Investments were also channeled into expanding their market reach, enhancing customer service, and improving the overall quality of their vehicles. These actions were essential steps in rebuilding trust and repositioning Lucid in the automotive industry. Stabilized, yet not secure, the road ahead for Lucid remained fraught with challenges. Investor confidence can be as volatile as a stormy sea, and Lucid's stock has certainly weathered its fair share of storms. Following the announcement of the substantial investment from Saudi backers, the stock market's reaction was a spectacle of highs and lows. Initially, Lucid's share prices surged, a clear indicator of the market's optimistic reception towards this financial lifeline. However, the euphoria was short-lived. Investors, while hopeful, remained cautious, scrutinizing every bit of news for signs of sustainable recovery. This led to notable fluctuations in stock prices. One day up, the next down, as if the stocks were riding the very waves of uncertainty that the company sought to calm. Trading volumes also saw a dramatic increase, as traders and investors alike tried to capitalize on the volatility. This surge in activity further underscored the heightened interest and speculative nature surrounding Lucid's future. Market capitalization, reflecting the total value of all Lucid shares, experienced its own set of ups and downs. This metric, often seen as a barometer of market trust and expectation, mirrored the complex sentiments ranging from buoyant optimism to cautious skepticism. As the tides of the stock market fluctuated, Lucid's journey to recovery was anything but smooth. With new life breathed into its financial lungs, Lucid looks to the future with cautious optimism. The recent infusion from Saudi backers has not only stabilized the company, but also set the stage for ambitious growth. As we peer into Lucid's horizon, it's clear that the company is not merely content with survival. It is strategizing for a robust expansion. Post-investment, Lucid has made several strategic decisions that signal a bullish outlook. One of the foremost actions was to ramp up production capacity. This move is aimed at meeting the growing demand for electric vehicles, a sector projected to expand significantly in the next decade. Additionally, Lucid is exploring avenues into new markets, particularly in regions that are just beginning to embrace electric mobility. This geographical diversification is expected to not only spread risk, but also increase the brand's global footprint. The long-term impact of Saudi Arabia's involvement could be manifold. With substantial financial backing, Lucid is in a position to innovate aggressively, possibly outpacing competitors in technology and efficiency. However, this partnership also brings challenges, including navigating the geopolitical complexities that come with substantial foreign investment. Moreover, the electric vehicle market is notoriously competitive and rapidly evolving. Lucid will need to continuously innovate and adapt to shifting consumer preferences and technological advancements. The road ahead is lined with both opportunities, such as potential collaborations and new technology integrations, and obstacles like regulatory changes and market saturation. Only time will tell if this phoenix can truly rise from the ashes, with Saudi Arabia holding the torch. From the brink of bankruptcy to a shot at redemption, Lucid's journey is a testament to the power of strategic partnerships. We've navigated through Lucid's precarious financial waters, witnessed how the infusion of capital from Saudi backers has provided a much-needed lifeline, and observed the stock market's volatile but hopeful reaction. This narrative isn't just about avoiding financial collapse, it's about the strategic moves that could set Lucid on a path to recovery and growth. Lucid was teetering on the edge, with dwindling resources threatening its innovative pursuits. The intervention by Saudi Arabia not only pumped essential funds into the company, but also brought a renewed confidence in its potential. The stock market, ever reactive, has shown signs of optimism, fluctuating with every new development and announcement. Looking ahead, the road for Lucid is lined with both opportunities and challenges. The company's ability to innovate, scale production, and capture market interest will be critical. As Lucid drives down the recovery road, all eyes will be on how this high-stakes rescue mission unfolds.